Insurance Matchmaking, your path to health, life, and Medicare coverage with Matt Libby Insurance. And now, sharing his knowledge, here's your host, Matt Libby.
Well, welcome back to Insurance Matchmaking. Kind of a surprise as I came in to record this morning. There's this big, what looked like a poster. I thought it was stuck a sticker on the table, and then I realized, oh, it's the sign. If you listen to the Country Giant at all, you should be hearing about this cruise trip. And with Trace Atkins, Clay Walker, and Low Cash are going to be on this cruise and get a chance to enter. And one of the ways to enter is I've got what this is, it's a sign that has a QR code on it, and you come by our office and scan that with your smartphone and enter the contest. And those other locations, I'm not sure who the other sponsors are. I don't have that info right in front of me. But you can always come to my office and at least get an entry in, come in, say hello, and hey, win a cruise. The cruise is October 27th to November 1st. I believe it's a Caribbean cruise, and that's a great time of year generally to do that. Weather's usually nice unless you hit a hurricane, of course. And don't want to be Debbie Downer, but they do happen. But I'm going to Nassau, Key West. Of course, Fort Lauderdale will be where it goes from. So check that out. And got a couple things I want to kind of address today. A lot of issues happening. I think I'll start with the Affordable Care Act issues. Some of the things that I've mentioned this previously. The One Big Beautiful Bill didn't address a lot when it comes to the Affordable Care Act. One of the things they are pushing is for especially younger people who have been on Medicaid and probably should be working, I guess is the best way to put it. A lot of people get on government programs. Maybe they had something temporary issue and they did need some help, but they should be beyond that now and out working. And so one of the things with Medicaid is every year you have to update your paperwork and make sure you're still eligible. So one of the things they're changing on that is making it where you have to do it every 6 months. So that's going to be an issue for a lot of the younger ones that could be on Medicaid, or in other states they may be on the expanded Medicaid and paying nothing for their health insurance. And the administration basically is trying to cut some of that budget by eliminating people who shouldn't be getting as much benefits as they are. So they're going to have to recertify every 6 months, which is going to push them. There also is going to be some, I think it was more with food stamps, the SNAP program of having to work at least 80 hours a month. It's not 80 hours a week. So I've heard people say that. That's kind of hard. Most jobs are 40 hours a week. So requiring people to have 80 hours a week and still receive government benefits, I don't think that makes a lot of sense. And it's not just work. It's you're looking for work, doing training. I think there's some volunteer benefits in there also. So there are ways to continue doing the benefits and receiving the benefits, but it's trying to get more people back into the workforce, and obviously, and paying taxes. That's what politicians want to get everybody paying taxes, so they can expand other programs that they want to expand. So some of those checks they have to do. So that's one of the things that affected the marketplace plans. The other is in the 2026 Marketplace Open Enrollment Rules Guide is what they called it. And some of that is already starting in that some people have had people call in and say they've lost their health coverage. And it's not that benefits are being taken away. It's a matter of some of the rules that had been laxly enforced are being enforced. And one of those is the subsidy that you get for an ACA health plan is called the Advanced Premium Tax Credit. If you're a longtime listener to my show, you've probably heard me say that before. And what it is, based on your income, you get it's called Advanced Premium Tax Credit. So the government or the IRS, the marketplace, whichever term you want to use, is advancing you based on your estimated income for the year, a tax credit that goes towards paying your premium. That's why it's called an advanced tax credit. But one of the things, again, advanced tax credit means you need to file your taxes when the time comes to reconcile the tax credits that you received because you may have been overpaid Or you might even been underpaid. So, say you estimated your income at $50,000 for the year for you and your spouse, and you get a decent subsidy for that. But when you file your income tax, it ends up it was $45,000. Well, you had $5,000 of income less than you estimated, so you didn't get as much tax credit as you were entitled to. So that tax credit that you didn't receive as an advance will be applied to that income tax return that you're filling out, and could be a refund, or it could just lower your taxes. It depends on each individual situation. But of course, the reverse is also true. You estimated your income to be $45,000, and it ended up being $50,000. Now you have $5,000 more dollars of income, which means you got more tax credit than you should have been. So the tax credit that you got extra is going to be added to your tax burden, I guess is a better way to put it. So it could you might still get a refund, but you're going to get less of a refund, or you could indeed owe some taxes. So that's why it's very important to estimate your taxes. And the reason I bring that up, spoke to somebody yesterday. We've had a couple other clients call in, and they got their insurance wasn't canceled. I mean, that's what everybody says. Well, I'm going to lose my insurance. They're actually not losing their insurance. They're losing the tax credit. And if they're losing that tax credit, they're not going to be able to pay the premium, because generally what it is, it's usually been pretty substantial. Usually, around $1,100 seems to be the norm when it's now you're not getting it. Or, for a younger person, yes, it might be $400 or $500 where they were paying nothing for their health insurance. You've got to file your income taxes. You need that 1095-A. If you need help with getting that 1095-A, reach out to me and I can help you get that. Even if you're not a client, there's some steps we can go through. Now you can get it if you signed into the healthcare marketplace. Maybe you signed yourself up. You should be able to sign back into your account and go back and get those previous year's 1095s, and then find a tax preparer or CPA and ask them to file your amended tax returns for the years that you missed. If you haven't filed your taxes in the last couple of years and you're on the marketplace, I suggest you get with a tax preparer as soon as you can and get that taken care of before you get the notice that, hey, you're losing that tax credit next month because you have not reconciled your income tax. So they're going to crack down a lot on that. And one of the things they're going to do is in the first year, each year you have to file. So if you haven't done your income tax in the previous year when it comes up for open enrollment, then they're going to turn around and say you can't re-enroll. Now, that's one of the things I'm going to get into here is the stating your household income if you don't have a tax return to demonstrate that. So maybe you haven't filed taxes in a year, but it's your first year going on the marketplace, and now you're going self-employed or something like that. Or a lot of times what I'll run into is people who are maybe on disability or early Social Security. They're not filing their income tax because it's not taxable income. You are really supposed to still fill out a tax return, but they generally don't go after people if that only thing they're drawing is Social Security and they're below a certain income level. But if you're going to apply for the healthcare marketplace plans, then you do have to file your income tax. And also one of the things on that to remember is if you're married, you have to file jointly. There's only one exception on that, and that is if for domestic violence, a spouse has exited the marriage home for safety reasons, they can get a tax credit and get health insurance without filing jointly. But that's an exception, and I'm not even really sure how you get that exception. I haven't dealt with that with anybody, but I have run into people that they're living in different states because of jobs, or they just decided living together was not a great idea, but they haven't legally gotten a divorce. And unfortunately, if that's your situation, you either have to agree with your spouse that you can file jointly, or you can't get the tax credits for the marketplace. So that's just the way they set it up. If you are married, you must file jointly. But there's certain things that you can do to prove your income. One of the things this fall is going to be a big thing. If you currently paying zero, you have to do what they call active renew, and pretty much everybody's going to need to renew and not just depend on that automatic re-enrollment. So we're encouraging everyone, we're going to be reaching out to folks to get those income estimates so we can quickly go through renewals and get that done, and then get that done in November and not have to worry about it. They are going to shorten the enrollment period, but that's not happening this year. Currently on this year's enrollment, we are still going to go to January 15th, but that's not going to be the case next year for the open enrollment. So to prove your income, you can use your 1040 return. You can use your W-2s. You maybe pay stubs from an employer because it should have your year-to-date. A self-employment ledger documentation. That could be your Schedule C from your taxes. You may have Social Security statements, an unemployment benefits letter. And then there is a complete written explanation form. You can't just attest to the amount. You'd have to do a little bit more formalized report for that. And then for self-employment income, there is several ways to document that income. Of course, you could have a 1040 SE, a 1065 schedule, that's K1 with Schedule E. There's Schedule CF or SE for self-employment income. There's this SE. I didn't read it. Of course, your tax return. Bookkeeping records. If you're keeping good records, then that can be Excel spreadsheets. Have receipts for your allowable expenses, which I think that's all. I've got a lot of receipts for my business, so that'd be a lot to turn in. But sign payroll sheets, I'm not really sure exactly how that's going to prove your income. It's going to prove your expenses. But you could have quarterly or year-to-date profit and loss statement. That's, a lot of business people are going to do it. A lot of people, when you go out self-employed and don't think about that, maybe you're mowing lawns, maybe you're worked for years as a plumbing or HVAC person, and now you're doing it, started on your own, and you're by yourself, and you're just going out, you're charging people, and you're giving them invoices, you're moving on, but you're not keeping up with that bookkeeping. So those are some things that if you are self-employed, you can get health insurance, you can get help paying for a health plan. I have a lot of people who are self-employed, and again, that's if you haven't filed taxes in the last several years. If you've been filing taxes as self-employed for the last 2 or 3 years, if your income that you're estimating is not a big difference from what you've had on your taxes the last couple of years, they're generally not going to ask for that proof. What happens is maybe you are working somewhere and you're making $65,000 a year, and now you're self-employed, and say you're going to make $30,000 because you know that you're starting a business, so you're not going to make as much when you first start, and you also have those deductions that you take from your self-employment income. So your net income is probably going to be a lot less than what it was. You have to be able to show why it's less. So anyway, we're up on the break, and I'll touch back some more on this right after the break.
It's back to school time, and Twin Lakes Fiber Internet gets an A+ for keeping everyone happy online. Kids doing homework, mom watching her favorite show, dad glued to the game. Rest easy knowing your internet can handle it all with a gig speed fiber connection. Now with new speeds and lower prices, there's never been a better time to make the switch. Call 800-644-8582 or visit twinlakes.net to get started today.
Join Habitat Restore at their pop-up donation event every second Saturday of each month at First National Bank in Sparta. The Habitat team will be there ready to go to receive your donations. So don't miss an opportunity to declutter and make a difference at First National Bank in Sparta with the Habitat Restore pop-up donation event every second Saturday of the month.
And now, back to Insurance Matchmaking with Matt Libby Insurance.
All right, just before the break, welcome back to Insurance Matchmaking. I was talking about the self-employment income, and like I said, you used to be able to just attest to your income, sometimes, and it may still be the case. I don't know if it's going to change. Of course, I haven't seen how the application process is for the 2026. Currently, a lot of times if your income's a lot less, it'll say, why is your income less? And it's because of job loss, job change, moving. So those things can sometimes you can just check that box and it goes back again. If you've been good with reporting your income taxes, filing every year, then they usually give you the grace to do that. Now, the one thing again, if they if they do send up a red flag or whatever on your eligibility results and says you need to prove your income, it's not the end of the world. It's not going to stop you from enrolling. But you have 90 days to get that information in. And if you don't get that information submitted within 90 days, then they will go ahead and then they will cut off that tax credit. Just the same thing like for those that I've been running into lately that are getting their tax credit suspended because they haven't filed their income tax. The government's going to get their money one way or another, so file your taxes, folks. There's also what they consider unearned income. And some of that, you may need to submit some documentation for that. It could be an annuity statement, pension distribution, workers' comp, prizes, settlements, and awards, including court-ordered awards letters. Those are the things. Those are going to be considered of income. Proof of gifts, proof of inheritance in cash or property. But a lot of times inheritance is not going to hit you tax-wise. I'm kind of surprised it's on this list. Proof of strike pay. So if you're out on strike from your employment, that may be something that you need to make sure you've updated with your income. So, and then immigration status, there are, immigrants. You don't have to be a citizen to utilize the healthcare marketplace and be eligible for tax credit, but you do have to be a legal resident. So you either can have a permanent resident card, a reentry permit. I shouldn't have said permanent resident. You have to be a legal resident. If you may have a employment authorization card, a I-766. I've actually had a client had that form. A temporary I-55-1 stamp on passport. These are ways that we may have to prove your eligibility. Again, those are ways that you have 90 days to get that information submitted. So it's, again, we can get your application done. I have an immigrant group that I've worked with, and of course, and then they add their spouse, and so and a lot of them, they came as refugees. They're now citizens, but their spouses are not citizens yet. So we still have to submit that immigration paperwork, and it gets a little frustrating because sometimes I submitted it last year and they request it again. So fortunately, on the ones that I did, I had a copy of it on electronic file and just submitted the same form again, and it went fine, which shouldn't have had to submit it again. They had the info, but that happens. So I wanted to touch a little bit again on Medicare. We've been talking a lot about the Part D. The Inflation Reduction Act put that $2,000 maximum on your cost of drugs. In 2026, I believe it's going to be $2,100. It's not a big change, but you still have. So for all practical purposes, let's talk about the $2,000 max out of pocket, and of course, again, your prescriptions have to be on your insurance carrier's formulary for that to apply to the $2,000. If they don't cover the drug, it doesn't go towards that $2,000, and so you could still have more out of pocket. I had somebody that was looking at their stuff this week, and that kind of came up that they were going to have more than $2,000 out of pocket because they had a couple things that weren't on the formula, and a couple of them I really thought was kind of strange because they, in the past, have been very common prescriptions. So what they may end up having to do is either change to get a similar prescription or possibly get what's called a formulary exception. And usually when that happens, it will be placed on Tier 4, and so it'll be more expensive up front, but it will apply to that $2,000 cap. So that's probably what will happen with this individual, and they'll probably be all right. Then the drugs that they had, that was the other thing, that weren't on the formula, they weren't real expensive. So I'm not sure exactly why they weren't listed. They have to cover a drug in each class, so there's a possibility of just changing to a different prescription. The other thing was, and I've mentioned this a couple of times, and just I'm seeing it more and more, and I'm seeing a lot of, kind of the rumor mill. I can't go into too much specifics because I can't tell you about what plans are going to be in 2026. I can't reveal those secrets, and I don't have exact numbers. I don't have confirmation on some of these numbers, but we are expecting some serious premium increases in the Part D prescription drug plans. Of course, the deductible is going up, I believe, to $615 from $590 this year. So a lot of those Medicare Advantage plans, a lot of them have instituted the deductible for Part D. And some of them, it's the full whatever allowable. Some of them, it's like $250. Again, when you're used to going to the pharmacy and paying $40 for a brand name drug, and then they tell you, well, it's going to be $300 or it's going to be $600 depending on your deductible and how much that drug costs, those are surprises you don't want to run into. But one of the things that came up recently, and in just kind of thinking back on it, because like I said, there's going to probably be some big increase in some of these Part D plans. And whether there's still going to be a zero premium plan out there, I don't know. I'm not the company that currently has that zero premium plan. I'm not appointed with them. But if that's the plan that's going to fit you, I'm still going to recommend that that's what you go. And I will say they have lousy customer service. Since I'm not saying their name, I think I can get away with saying that. I don't recommend their plan unless it is the right fit for you. But what's come up in some of these plans going up, say maybe you have 2 brand name drugs. They're about $600 costs, so you're looking at paying that deductible, and then you're going to pay a high premium drug plan, so you get good coverage on that, and you're going to have that $2,000 out of pocket. Now, of course, that $2,000 out of pocket is in addition to whatever monthly premium you're paying for the plan. So you got to put those two together. You could still be looking, if you're paying $100 around, $90 to $100 a month, you could be looking at about $3,000 or a little over $3,000 out of pocket. So one of the solutions on that was the Canadian Med Store. You've heard me mention that a couple times. There is a link on my website if you want to. I've got them on there. I can't remember if I have a link. I have or maybe it's contact me for more information. I'll have to double check my website on that. Just realized when I said that. But you can read about them on my website. And don't get confused. It's Canadian Med Store. They are not in Canada. The company headquarters are in Florida, Zephyr Hills. Just a couple of weeks ago when I was in Tupelo, got to meet meet with or see again and speak with the founder of that company, met Bill about 6 years ago now when I met Bill. And so I've talked to him couple times, and he's had some great insights on some of the things that I can help my clients by utilizing their programs. So one of the things was I mentioned, I used the example of my client that takes Jardiance and Xarelto, very expensive drugs, and we looked at the plans for this year. One was $95 and one was $27, and I saved him about $500 total for the year by putting him on that $95 plan. Doesn't seem like it makes sense, but because he was like prepaying the deductible in that $95 a month, plus was paying a copay for those tier 3 prescriptions instead of paying the I believe 25% is what Medicare recommends. It would have been more out of pocket, and he would have been closer to that $2,000 than he was because of going that way. And Bill brought this up a couple months ago, but the fact of those 2 drugs, that they're able to get those drugs, and there's several others that are $50 a month. So if you take that $50 a month for those 2 drugs, that's $100 per month, so $1,200 for the year. Everything else is a low-cost generic. That person actually could be ahead by getting the zero premium plan, never hitting that $2,000 max, and now they're looking at about $1,200, maybe $1,500 total out-of-pocket costs for their drugs versus $2,000 out of pocket for the drugs plus, another $1,000 for their monthly premium. So they can save a lot that way. So that's one of the things I'm probably going to be recommending some of my clients this year. If it's certain drugs, if they can get, those are ones that they can get for $50 a month. And if you don't have too many of them, if they have 3 or more, yes, they're probably going to be better off with a high-cost drug plan because they will hit that $2,000 max out of pocket, and the total cash out could be more. But the MedStore program works very well. They're going to mail, you have to have a valid prescription. You submit that to the company here in Florida, and then they submit your prescription to that overseas. And sometimes, and they're not always Canadian, they do have some other overseas pharmacies, but most of the time it's from Canada. And then they mail that to you. Now, unfortunately, anything that's considered a controlled substance, you can't get that because of the rules for getting that across, borders. But the non-regulated, restricted prescriptions, you can get those filled. The other thing that's come up from the Canadian Med Store that I've referred a couple of my clients to is, unfortunately, I have some clients who are dealing with their weight, and their doctor wants them to take what they call the GLP-1 shots, like like Ozempic and Zepbound, the semaglutide, different prescriptions that they're diabetes drugs, and typically for people like myself who are type 2 diabetic. But unfortunately, most insurance companies will not pay for those prescriptions unless it's for diabetes. So those are very expensive drugs, and you can get them. You can get them through the Canadian Med Store, and probably I think they're saying about 50% less than what you would spend at a local pharmacy just picking it up there. Now, they're not going to be free. They're not going to be cheap, but they are going to be less than just going to the local pharmacy and paying cash for them. So if that's something you're very much interested in getting in, and I've noticed there's ads, different programs that are offering those, so they could be competitive there. I just know, you see an ad, you call an 800 number, how reputable are they? Whereas I can vouch for the Canadian Med Store, and my concierge manager is Amber, and I think when I started with them, she was it. I don't know that there was others that she was managing, so I usually just deal with Amber, but she may assign someone else to be your concierge. But the great thing on that is when you call back in, you email conversations with that same person. So you're dealing with the same person all the time. They're not a huge company, so you get personalized service. So I highly recommend. And in full disclosure, they do pay me a referral for those clients, but it's not a huge amount. So don't think I'm not doing this to get rich, but if you use them, please use my name. You don't have to be a client. You can get the information on my website to how to get a hold of the Canadian Med Store. Their actual website address is it's Unlimited Pharmacy or something like that. I can't remember now. I just went blank on it. Even if you're not one of my clients, tell them, hey, I heard this guy Matt Libby on the radio and told me I should call you guys. And I can get my referral. It's not going to cost you any more for what you're getting. You're not going to save anything by not, using my name. But it's when they send me a referral, they don't tell me who it's for. They just say, oh, here, thanks for sending the people to us. So the onesie-twosies, I can kind of figure, oh, yeah, I did just recommend somebody, but that's who filled their prescription. So they're very compliant when it comes to like the HIPAA things. They don't do that. So anyway, again, I'm running out of time here. Just notice the clock. Remember, talk to you again next week. And remember, at Matt Libby Insurance, we can cover you head to toe. It doesn't have to cost you an arm and a leg.
You've been listening to Insurance Matchmaking with Matt Libby, your path to health, life, and Medicare coverage with Matt Libby Insurance.